Hi, this is Raj Sukheja, your deal and business architect, bringing you a new video today on your request. Today's topic, the dynamic shift in international finance. Options galore, but many not aware. Let me say this clearly, we are living in the most flexible, fluid, and fragmented financial ecosystem in global history. Yet 80% of businesses still approach funding the way it was done 25 years ago. Walk into a bank, apply for a loan, wait, negotiate, hope. That model is no longer the center of gravity. Let's break this down structurally. The collapse of single source financing. Earlier, international finance was dominated by commercial banks, development financial institutions, government-backed credit agencies. Today, capital has diversified into layers. You now have private credit funds, family offices, sovereign wealth funds, venture capital, venture debt funds, structured trade finance providers, revenue-based finance platforms, cross-border NBFCs, supply chain financing platforms, fintech-led digital lenders, crowdfunding, and tokenization models. Global private credit alone has crossed approximately 1.6 trillion in AUM in recent years. That's larger than many traditional banking segments in specific geographies. But here is the paradox. Access has expanded, awareness has not. The rise of private credit and alternative debt. Banks have tightened due to Basel III and Basel IV regulations. Capital adequacy norms are stricter, risk-weighted assets are under scrutiny. Who filled the gap? Private credit funds. These funds provide structured debt, mezzanine capital, bridge financing, acquisition finance, project-based structured instruments. For mid-market companies, this is transformational. But most SMEs, small organizations or even mid-sized organizations, still don't know how to structure their pitch for such institutions. They don't understand EBITDA coverage ratios, debt service structuring, cash flow, waterfall models, governance and security packaging. That's why advisory architecture becomes critical. Cross-border capital mobility has increased. Earlier, raising capital internationally required heavy compliance layers and physical presence. Today, funds are allocated digitally, investors evaluate via data rooms, mandates are signed across jurisdictions, structured notes can be issued through SPVs. Middle East funds are actively deploying in India. European family offices are investing in emerging market SMEs. African funds are partnering with Asian advisory firms. Capital is no longer local, it is thematic. But here's the key. Investors today don't fund businesses, they fund structured clarity. If your financial documentation, risk mitigation, capital stack design are weak, you are invisible. Tokenization and fractionalism. This is a silent revolution. Real estate, revenue streams, infrastructure assets are being fractionalized. Tokenization enables smaller ticket entry for investors, liquidity layers through secondary platforms, borderless participation. Now, regulatory frameworks are still evolving in India, but globally asset-backed token structures are increasing. The smart entrepreneur is asking, how can I convert my illiquid asset into structured investable units? Most businesses don't ask this question. They are sitting on dormant balance sheet power. Trade finance is getting reimagined. Traditional LC-backed trade is declining in some corridors. In its place, supply chain finance platforms, invoice discounting exchanges, export credit-backed digital platforms, fintech-led trade underwriting. India's exports are growing, but MSMEs struggle because they do not structure trade credit properly. Working capital is not just about overdrafts. It is about inventory cycle optimization, receivable securitization, payable structuring, credit insurance layering. Very few businesses understand this at a strategic level. Venture debt and revenue-based financing. Startups today don't need to dilute early. Venture debts are active in India and South Asia. Revenue-based financing allows repayment linked to revenue percentage, no heavy collateral, faster approval cycles, but again, awareness gap. Founders think in binary terms, equity or bankroll. There are at least 12 hybrid structures in between. The role of advisory intelligence. This is where I tie in Red Mammoth Ventures LLP. International finance today is not about finding money. It is about structuring the transaction, building investor-ready documentation, designing risk shields, understanding jurisdictional compliance, creating layered funding architecture. At Red Mammoth Ventures, LLP, we operate as deal architects. We don't apply for loans. We design capital structures. There's a difference. When businesses approach capital casually, they get rejected. When they approach with architecture, they get evaluated. Why many are still unaware? 3 reasons. Information overload, but no interpretation. Lack of transaction literacy. Fear of cross-border compliance, and sometimes ego. Many promoters don't want to admit they don't understand modern capital instruments. But finance has evolved. If you don't evolve with it, you will fund growth from retained earnings, while your competitor leverages structured capital. The geopolitical layer. International finance today is also shaped by US interest rate cycles, Middle East liquidity pools, China supply chain management and realignment, India's manufacturing push, digital banking penetration. When global rates fluctuate, capital flows change direction. Businesses that understand macro movement position themselves accordingly. Others and react late. What should businesses do now? Here is practical action. Audit your capital structure, map your 3-year cash flow visibility, identify if your growth requires equity, structured debt, or hybrid. Clean compliance and financial reporting. Create a data room before you approach investors. Do not approach capital emotionally. Approach it strategically. The shift is dynamic. Options are galore, but awareness separates funded businesses from struggling ones. If you want deeper insights into structuring international transactions, hybrid funding, tokenization models, or even private credit access, connect with us at Red Mammoth Ventures LLP. We design deals, we structure clarity, and we help businesses think beyond conventional finance. If you like this video, subscribe, comment, and like so that we can continue to bring such videos to you. No fluff, no noise, straight facts, and analysis of the business topic and how I see it. All those who comment seminar will be offered 1 complimentary online seminar shortly. This is your host, Raj Sukheja, signing out.